Last week, we talked about the potential inflection point, and we talked about there's kind of the bearish scenario and some kind of the best shorting opportunities because of the market breadth overbought and also touching the supply line of the down channel. So last week, we were somewhere around here. So that was on Monday. So this bar is on Tuesday while it is still unfolding. So at that point, I think is somewhere around 4,000. And I talk about the scenario that is likely to go down and to touch the demand line. And that could provide some kind of the support. And depending if the market is mercy or not, we'll see whether we'll have an immediate follow through, which means that's a break below and then continue to go down, or another attempt to rally, which is currently unfolding. So attempt to rally, and it might just well, it's still unfolding, so we'll just go into that shortly. So I think the Tuesday opportunity for shorting turned out very well. I do have a trade review. I'll talk about the a one-day trade of the swing trading. So instead of the typical day trading, so this is exactly like a very short-term swing trading opportunities. And at the moment, so we definitely get some kind of the support or the no follow through to the downside. So not only this demand line provides some kind of the support, just like here or here or here. This horizontal line also provides some kind of the support as well. So first, we did not really see the immediate follow through to the downside. So that is kind of disappointed because I thought that the rally will be weak. So especially at this point. So this is the point that I thought that we might reverse and continue to go down. So once we go down and then break below, that should provide a confirmation signal to go down to at least to test this access line of around 3,800 to about probably 3,850. So this region. However, this week we got really two big events. So the first one is definitely today. I think another 1.5 hours, we got a CPI data coming out. So that should really move the market. So it's all about the inflation. So tomorrow, we got the FOMC. So Fed is going to raise rate again. So whether it's a 50 basis point or it could surprise everyone. So we yet to see. So anyway, the market is sort of just really ahead of the announcement of the data. So with this 2 bar, so yesterday with the increasing of the volume and then push it up, and today with a Globex period, the non-regular trading hours back in the Asia and London session, we already see that the S&P 500 just inch up a little bit here. So of course, we still could view it as that's still the action. And currently, I think the reaction or the test is a little bit too deep. So I would say the rally is a little bit too strong for the very bearish case. So this is something that I would like to probably would not like to see for the bearish case, because let me zoom out a little bit here. Okay, so Nikki just said, but likely will hit the channel line. Well, this is a good point. So if we look at the past, so this is actually a very classic down channel. So the down channel with quite a number of touch. So every time S&P 500 touch this supply line of the down channel, it just reverse. So have a leg down and then wick rally. Okay, so touch this point, leg down, wick rally. Okay, so it never touches this point or the supply line twice. So now would we see that touches this supply line twice? So if that's the case, I think this is by nature a slightly bullish structure. So they've said if clear above 4,100, oh well, if it's clear above 4,100, then definitely it's a bull case, it's a bullish case. So first, because every time you see that one touch, go down, wick rally, go down, wick rally, go down. So it never touches this line for 2 times. So now it seems like touches 1 time, go down. The reaction or the retracement is quite deep. I mean, in terms of the impulsive down. So now this rally is a little bit strong for the bearish case. So I would say that in case we see that touches this line, this supply line, 2nd times, so I think that structure is a lot stronger than the previous structure here, or even slightly earlier back in April. So it's stronger than here. Even right now, the rally like this is stronger than this rally or even this rally. So I would say that the current structure is slightly stronger. So if later 9:30 we got a expected CPI, or maybe say sort of like imply that inflation is really under control, then it could really prompt S&P 500 or the stock market overall to just have a test of 4100. So have a test of the previous swing high. So if that's the case, then definitely I will switch towards the bullish case, because let's just remember the short-term trend is this. This is a short-term trend. It's still up. By no means that it has been violated. So look at this. Upswing, downswing, upswing, consolidate, upswing, downswing. So has been supported by this demand line. So far, it's still an uptrend short term. Okay, long term, no doubt, is still go down. So this is a long term, there's a short term. All right, so short term is still up. So in case it's still going to come back, touch a line, and even if has another reaction, and I think this is a stronger structure than the previous reaction. So if that happens, then likely it could probably consolidate like this, and then eventually to go up again. So means that we could see the Christmas rally this year. So that is a bullish case. But what about a bearish case? So the bearish case is still by default. I still would like to see a bearish case, because right now is really not the best time to buy stocks, because a lot of them are overbought. So really this is not a good time to jump in to buy stock, because we don't really want to chase the stocks which is still rising up and then it's just run into the overbought condition. Rather, I would prefer to buy something like this, a pullback. So something like this. So that is a way better structure. So anyway, so if later 9:30, that's definitely the event that everyone will be watching. So if I think later, let's just probably do some plan here. So first, I would definitely be geared towards the hourly structure. So the day low and the day high for yesterday is definitely still in play. So day low here somewhere around 39.60, 67. Day high is somewhere around 4025. So I think this can be a good bullish structure. So a test of the axis line. So a test of this line about 4020, and then to go up. So here is the point that I think a lot of the traders might go long upon a pullback reversal. So other than that is a reversal trade. So it means that it's probably going to touch this second times, and depending how it goes, so that's definitely got some supply right here, and also together with the up channel overbought. So if we just let me clean this and shrink this chart. Okay, so let's look at this. So if we just take a look at this, this is the point that everyone is interested. So not only it touches this channel overbought, so this is a supply line again. So in terms of the immediate short-term structure, so there's another short-term structure. So here, so this is also another trend line. So maybe let me put it back to the daily chart. So that's definitely a lot of the confluence right here. Okay, so you can definitely see it. This is the middle line. So the middle line also provides some kind of the support, resistance, support, breakdown, become resistance. So now it becomes the resistance again. So resistance of the mid line of the up channel, okay, and also resistance of the supply line of the down channel, and also resistance of the previous breakdown area. So that is the interest area that I think a lot of the traders, investors are watching. So just watch out for some kind of the reversal type of the signal. Means that it could probably just test this area. So maybe you could just do something like this, go up and then have some kind of the rejection tail coming down. So maybe it's like a shooting star or the inverted hammer, or at least the rejection tail. Okay, so if that happened, then it could provide another opportunity to go short, at least to come back down again. So from here to here, maybe around 100 points. All right. So yeah, this is the S&P 500. So at the moment, I think that this is still a relatively strong structure, because the up channel, the immediate short-term up channel, is still intact and provides some kind of support. And I think the rally is stronger than I expected. All right. So, but anyway, we got two events coming out this week. The first one is definitely at 9:30 p.m. My time zone. So another 1 hour and 15 minutes. So the CPI data, and also the FOMC is on Thursday morning. So it means it's the Wednesday afternoon in the US. All right. So definitely watch out for these two events. They are the market movers events. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.